Hello and welcome to FX Street Currency in Play. I'm Matt Brown. I am joined by Eddie Tofpik, who is head of FX at ADM. Now let's get straight on to the slides, Eddie. Euro dollar open position in put spike is a correction due. We've seen a little bit of a sell-off in the euro, but I don't really think there's a big move there. And obviously people are looking at the options, but not a big move. But I think one thing we have seen today is the change in sentiment, and it's a risk-on sentiment, I should say. And on the back of that, we've seen gold drop in Asia as risk reversals turn negative. And Aussie dollar fails to cheer North Korea in action, and uptick in Chinese inflation. Some good data actually out of China and Japan this morning. So you've kindly brought along a few slides this morning. We'll look at euro dollar first off. It's been onwards and upwards for the euro. Do you think this trend is starting to
I can't tell you. No, look, it's still going along the same angle. It's still within the channel of the Andrews pitchfork. It's actually within ticks of the centre tine. I don't know what else to say. You have resistance. You have resistance at 121.08, which is just above the recent high. Yeah, 64, 22, 55, which I think is actually quite substantial, and then 123.5. But there really isn't that much support until you get down to about the 117, 118 level. If it comes down, then you've got to be looking for that sort of level somewhere around about the 117.90 area is where the lower channel is. And that would be a reasonable area to see if you're going to see some support come in at that level. But you've got to go down to something like 115, 114.90 for it to turn the trend. It's just still onwards and upwards at the moment, but within a nice, regular pattern. Obviously, Stein's law at some point will kick in and this will turn over, but not just yet, I don't think.
Understood. Buy for choice then. Moving on, we're looking at euro sterling. Interesting week with obviously Brexit negotiations.
Yes.
And that's going to be at the fore. Seeing a bit of weakness in euro? Do you think that will continue?
The key theme I've put through is we were getting 2 weeks ago so close to the 21st century high at 94.12. And I said, that's where you're going to see sort of more and more resistance gradually narrowing in as the market gets there. And it got to just over, 93, which there was the second from last resistance prior to that 94.12 area, and it came back down again. And we've had a bearish doji, which is a sign for a market to go lower, and yesterday a key reversal down. Though there's not been a follow through as such in that. But it would not surprise if we see a move down to say the 90.50 area, possibly even down to 90.20 area, and see some fresh support coming in. Yep. If we see consecutive moves below the 89.5 area, then this thing has probably finished its course. It's been running since April, May. So, and realistically, the June, July is when you could have turned around and said, this is actually the way it's going forward. So you've had a good run for 3+ months. It could be that we're actually now looking to maybe tip down a little bit. But I'd say the support's still underneath the market. It's quite good. Understood.
And let's look at something a bit more exotic this morning for Monday, and a wet Monday in the UK. But dollar Brazil, the real.
Exactly. I think it's because it's made this new low since that big move in May. Did that last night. We had a number of indicators. The most notable one is the most recent one, which was a dead cross, where the shorter moving average pushes through a slightly longer moving average, and both of them heading down. And that's an indicator the market was looking to go lower. And that was about a week or so ago. So now we're seeing the result of that. And the first result, it's taken out the May 17 low. The April 17 low, which is just above 308 even, that could possibly be the next target. It dipped too close to that to really say whether it did or didn't, but you could be looking down to about the 304, 303.80 area, which is the next major area of support underneath the market. There's a band it's working its way through. It's coming through it pretty quickly, but at the moment the indicators are for lower markets. If it should go below, say, something like 303 in the next 2 months, which is unlikely at the moment, but you never know, then this is actually becoming a strong real play, weak dollar play in that particular instance, but not likely at the moment.
Not yet, understood. And an old favourite, Bitcoin, bit of turbulent couple of weeks relatively, but is the trend still to the upside on this?
Well, last Friday we had that big move down, which is 4 bars ago, which was on the back of the Chinese cracking down on their mining operations
Yes.
in that region. I mean, there's a famous story of there's a dam, a hydro dam in China, where something like 80% of the electricity was taken off, sold to Bitcoin miners.
Understood.
Who were right next to the mine,
Yeah.
next to the dam, so they get the shortest amount of electricity to actually do this mining operations. If they're starting to crack down on this, which is where that big move down happened, it really hasn't been that much of a move. It dropped down to what we saw in early September. Yes, it's peaked out. There was a key reversal there 2 weeks or so ago, and that would have been to turn around and say, okay, if you're long, now's the time to get out. But until you get through 35.50, which is that drop down in August, then I don't think you're going to see necessarily a bearish market. We're moving towards a more neutral market. But to be honest, to really go neutral, you'd need to test 2,400. And to go bearish, you need to go through 1,600. That's such a long way. But then this is a great market to trade. It's a good market to chart in that sense. As a charting market, it's really good, but it's difficult to trade because of its nature.
Yeah, the volatility.
Yeah.
Fantastic. And finally, well, we're not going to see much volatility today in the markets.
There's no housing. There's going to be loads of housing starts in Florida in the distant future, but not right now.
Yeah, indeed.
Well, that's the other thing. I was talking to some of my metal guys on our desk, and I was saying, there's going to be an uptick in demand potentially for copper and other metals because of the demand for electricity, infrastructure, and housing. The biggest metal involved in that, apart from steel, is copper for the plumbing, etc. So there could be a follow-on uptick in the metals at some point in the future.
I mean, it may affect the US GDP initially.
Well, yeah, they're talking about down 1% or something for this quarter.
That's incredible.
Which, well, considering what it's done, I think it hit Tampa, which is the first time anything like that's hit Tampa since the 1920s. It's a situation which there's maybe more of because we got Jose still, which is moving along. And then I don't know what's going to happen yet. The end of September is the end of the season as such, but we'll see.
Understood. Well, on that note, Eddie, thank you very much for joining us today.
Thank you very much.